I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Christopher Mullen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim.
On Wall Street, they're pointing to the Dow Industrial Index hitting an all-time high. The S&P also near its all-time high. Do these numbers really tell us about how healthy or unhealthy the markets are?
Yeah, to an untrained eye, the markets look extremely strong. All the news is talking about the Dow just hit all-time highs. The SP 500 hit all-time highs this week. So, the news is really bullish. So the average investor, I talk about to subscribers how the market likes to kind of cover up what's going on. And, these two indexes are the two major followed indexes where a handful of stocks, I think, are holding these indexes up and pushing to new highs, kind of making everyone feel at ease. Anybody who is negative on the market hitting new highs kind of erases those fears and gets people bullish. But it's not the true picture, if you ask me. It's there's actually a lot of weakness in the market, and if the average investor was to look at their portfolio and they've got a big portfolio full of individual stocks, their portfolios are trading way off their highs. And the Russell 2000 is a good index for that. It's 2,000 small cap stocks. They are underperforming. They're typically a leading indicator, and a lot of individual investors carry these stocks. So when you go and see people looking at their portfolios, they're nowhere near trading all-time highs, yet the major indexes like the SP 500 and the Dow are trading at all-time highs. And that's a sign that the market is rising with fewer stocks supporting it. So it's kind of like a big cover-up almost. It's the big brand name stocks that can kind of squeeze a lot of juice into the market, move the entire index up, even though most of the stocks aren't. So for example, if we actually look at the RSP ETF, which is the equal weighted ETF for the SP 500, it's close, but it has not broken to all-time highs. And of course, with some of the leading and major sectors of the stock market, like the transportation, the financials, they are way off their highs, underperforming. They're all trading at resistance. They look overbought at this level. And, what the stock market loves to do is squeeze all the people who are short the market, anticipating it to fall. They squeeze the market with a short squeeze, meaning they'll make the market push up and make a nominal new all-time high, and then it'll hold up for a couple of days, and then you just see the market get clobbered and start to sell off. And I think that's what we're walking into, is a lot of people are covering their shorts. We've seen this on the NYSE volume ratio. It showed about 15 people buying, or 15 shares being bought on, I think it was last Friday, to every one share being sold. So that's 15 people buying to one person selling, more or less. And I consider a ratio over 3 to be extreme. So 15 goes to show how many people are covering their short positions, buying shares, and also how many people are now getting even more bullish on the market and buying stocks, anticipating this to be the next major bull market run that could last for months. So it's got a lot of people running in the same direction, and as you know, when everybody's betting on the same side, typically it's not long before you see things roll over and they all get caught left holding the bag of stocks. So that's where I think we're headed.
Has the Brexit had an unusual or unexpected impact on the market?
It has in some ways. There's a lot of uncertainty going on overseas. We initially saw stock markets crash for, 3 days, a huge downdraft, and then the dust kind of settled and equities rallied back. And we've seen everything pretty much rally back. We've seen stocks, the U.S. dollar, precious metals, those are the main, and bonds. They've all rallied substantially. Obviously, when the news came out originally of the vote, bonds, the dollar, and precious metals all rallied in a big way. Typically, we don't see the U.S. dollar rally, or see gold and silver rally with the U.S. dollar, but they did. And I think there's so much uncertainty and fear creeping into the market overseas that people are just seeing anything out, like over here in North America, as the safe haven. They're buying stocks, they're buying U.S. dollars, they're buying gold, they're buying bonds. They're just fleeing money from their country and moving it over here to try and get it out of their banking systems to try and just protect it where they feel is a safe haven. So we've seen this huge rally after the Brexit news, and I think it's just kind of the wave of panic and people saying, I'm moving my money out of here, and it's all just landing here, and we're seeing a big run up in price. But I think it's going to be short-lived. I think this is an emotional play. I think everybody's just kind of running for safety, but I think equities are going to roll over no matter what. I think it's not the best play to be putting money to work at.
The English economy itself seemed to be fundamentally strong. They had record low unemployment. Why would that change just because of this vote?
Yeah, I'm not sure how that would change, to be honest. I don't follow that at all.
Now, taking a look at gold, a bit of a drop today, but it's had a strong performance. Do you expect that to have maybe a bit of a lag right now over the summer and then pick up again towards the fall?
You and I talked about this a couple of weeks ago, how I feel as though we're going to get a big sell-off, I think, sooner than later. I think this final squeeze up in the market, in the equities market, is going to be kind of the tipping point, and how I think stocks are going to crash through the summer when people aren't expecting it, just like it did last August when nobody expected that huge crash in equities, and it just came during typically the lowest volatility, lightest volume session. That crash happened last year in August. I think the same thing's happening this summer. Right now, we are seeing everybody pile into stocks, the U.S. dollar, and they're rallying. They're pushing to new all-time highs. And today, we're finally seeing the people kind of, the money flow into the safe havens like bonds and precious metals. They're finally saying, you know what, maybe they aren't the safe havens. So they're getting sold off today, and money's moving into equities. And, we're seeing an extreme ratio with volume flows again on the NYSE today. We're seeing a ratio of 5 buyers to every 1 seller, which, again, anything over 3 is extreme. So everybody's really bullish on stocks again, which is great because it usually means we're close to a short-term market top. And we're starting to see that. Money's flowing out of out of gold, silver, and bonds, and it's flowing into stocks today. And I think we've got another day or two of upward bias in stocks, and then I think we're going to see a pretty sharp correction start to take place.
What's happening with oil?
Oil's been pretty volatile the last few weeks. We see these sharp drops followed by very strong rebounds. Overall, it's got I'm very neutral on crude oil. I think it's going to go sideways and slightly lower. I don't see any huge movements to the downside or to the upside. I think it's going to just kind of oscillate here in a big range between probably 44 barrels and $44 a barrel, and about $49, $48 a barrel for the next few weeks. We had a really strong pop today. It's bounced up to a short-term resistance zone. I have a feeling tomorrow it'll probably be a pretty dull session, or possibly Monday or tomorrow we see the market, crude oil pull back down. It's just been kind of very predictable in this range, has a strong bounce for a couple of days, and then rolls over, sells off, makes new nominal lows, has another strong bounce. So crude oil, I think crude oil's put in its bottom. I think we put it in a bottom a long time ago. It's just a matter of it building this, the start of a new bull market. So it's got to kind of consolidate. It's had a huge move, and I wouldn't be surprised if it consolidates for another month or two before we start to see that potentially move up.
Well, China has been buying a lot of gold or a lot of oil lately. And one of the reasons might be because they're in love with the SUV. Apparently SUV sales in China up nearly 10% over the past year. Yeah,
that's huge. And that could definitely play a huge role in the price of crude oil going forward.
We'll have more with Christopher Mullen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, is there any one area right now that you think would be relatively safe for people to invest in?
Yeah, there are a couple safe haven plays that I think a lot of investors don't realize, and one of them, other than gold and bonds, the one that catches a lot of people off guard is the utilities sector, and there's the ETF for that in the U.S., the XLU. And it's one of the strongest performing sectors of the year. It's up over 20% since January. And it's had a tremendous rally. And of course, it's fueled by the thought of lower interest rates or continued low interest rates. And of course, it's one of those safe havens where when people start to become a little bit worried that the stock market is getting a little frothy, a little toppy, they want to move into things that are kind of more of a safe play. And those typically are utilities. You're always going to need running water, natural gas, the services to run a town, a house. And so those also pay dividends. So naturally, that's kind of the last spot you can go because, that it's just where we're still going to have steady demand for that. And of course we've seen that. The other thing very similar to utilities, because you need them, are consumer staples, which is the ETF XLP. People have been flowing into that really since that August crash that we saw. We've seen this sector here, the consumer staples, just continue to climb and rise. And, it's posted some very decent gains since January, again, hitting pretty much all-time highs here just this week. So, people are moving their money. There's a lot of fear in the market. People are moving their money into the safer havens, things that are always going to be needed no matter how bad the economy gets. And that's a sign that, we are in the late stages of this bull market or the final stages of the U.S. large cap kind of bull market that we've been in for 7 years. We've already seen the small caps, the leading sectors like the transportation, financials, they're already broken down. It's just these large caps need to eventually top here. And once they break down, it's going to be lights out. We're going to see a very large crash, I think, going forward. But until they roll over, we're just going to continue to be seeing these safe haven plays grind higher. And for the equities market, like the indexes, like the SP 500 and the Dow, they're going to remain very tough to trade. They're going to be choppy. They're going to have large swings back and forth that are very unpredictable until we kickstart a new trend, which will either be to the upside, which I don't expect to happen. But once the trend starts on the downside, there'll be some great both long-term and short-term plays to be had.
Is this a summer where you should be paying attention to what's going on instead of selling in May and going away?
Yeah, I do. And, so many people there's so many trading platforms and services that people are able to use and have access to for free that, it is summer. It's hard to be glued to your screen all day. the best thing you could do is to go find a couple key sectors or the indexes and set some alerts on your trading platform, so you're sent an email and a text message so that when something big is starting to break out or break down, you're alerted to so you don't miss it, because it's unbelievable how many times you step out to go do something for a day or an hour, or you don't pay attention to a sector for a week, and you look back at it and you can't believe you missed the breakout. So if I give one tip, this is for pretty much all year round, but especially for summer, set some trade alerts at specific levels when something is breaking to the upside or breaking down, so you're at least alerted to, and so that you can get on board or avoid being on the wrong side.
Should you be more self-dependent in a time like this instead of relying on a professional to get around to adjusting your portfolio?
I believe you should. I've never been a huge fan of financial advisors who are using, hedge funds and things like that. I'm very self-directed. I like to do my own thing. I would much rather be extra conservative and miss out on gains than being left holding the bag and seeing the market drop and watching my portfolio drop 30 or 50% just because I was expecting somebody else to do it. Most portfolio managers, hedge fund or advisors for mutual funds, they're not going to really be moving you out. It's a lot of work for them. There's usually costs involved. They're not technical analysts. They're trying to get your money and have it invested long term. Just hold it, set it and forget it, you'll be fine. I don't believe in that. I would much rather get out early when you think the market's topping, and you can reload those positions when the market corrects in a big way down the road. It's something I think people should be aware of and not fully trust their financial advisor to, seek out a technical analyst to get a better view of what the long-term and near-term picture is.
What about these robo-analysis or advisor so-called people where it's a robot giving you advice, but do they really know what's going on?
Yeah, it all depends on the trading strategy. There's a lot of great robots or systems out there. They're typically the ones that I use and follow they're based strictly on technical analysis. They're following price, the trends, and other types of analysis, not so much kind of fundamental, but pure price action. And so they're following the trend. You're typically not caught for very long on the wrong side of a position because it's analyzing which direction something is going, and it's trying to get you positioned on the right side. There's just as there are some great systems, there's also some terrible systems, and it's really tough to find the systems that work consistently in more or less all market conditions, or to know when to move from one system to another as conditions change.
It's hard for that robot to take you out for lunch or a game of golf to find out what you're all about.
Exactly, yeah. It's pretty much you turn it on and let it do its thing, and turn it off when you want to not have any trading going on. There's zero interaction, and a lot of times you don't know how or why it's placing the trades. That's the kind of the black box, the strategy. That's how those kind of work. Much different.
Chris, thank you so much for being with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Christopher Mullen. His website, thegoldandoilguy.com. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.